Ring ring ring, hello cupcakes and insoles.
No?
And welcome back to Krown's magical Drip Cave.
The magical Derp Cave is back, baby. Welcome back to the Krown Crypto channel. It is a lovely Saturday morning over here from an island location in the unknown waters of the sea. And I wanted to follow up on some higher term time frame ideas and speak about what I believe, statistically speaking, is the likely worst case scenario for Bitcoin right now, and probably the rest of the cryptocurrency market as well. Anyways, before we actually get into this one, I do want to ask a question to the community, a question that I actually posed on Twitter earlier today, which was this. In your opinion, is the FTX situation a result of a series of bad judgments or malicious intent? Just obviously, we have no way to look into the mind of the people behind this, I suppose, but I'm just curious what the general sort of thought is here. Currently speaking, the community is very heavily in favor of malicious intent. Anyways, to get into what I believe is the worst case scenario that we can derive from statistics and probabilities as of right now, I want to go back to the 5-day chart that we've been looking at over here for the past, it's really been relevant for the past couple months, but it is now slowly coming to fruition. And it is this. It is a volatility versus stochastic momentum signature. Volatility represented by this indicator here, the BBWP indicator. Anytime that this indicator has gotten to extreme lows, extreme contraction, which are defined as anything below 15 percentile or more, the expansion phase from these extreme lows over the past 4, going on 5 years now, has led to an average move of just over 42.25% over the course of about a month and about 37 days, basically a month and a week. And if we were to look at the first standard deviation, it would give us a range where we expect 68% of the results to fall between of 35.25% all the way up to about 49.5%. The direction of the stochastic oscillator in combination with the volatility expansion phase that is naturally going to be following probably sooner rather than later has been actually correct 100% of the time in getting the direction of the volatility expansion for the past 4 years. Just because it's been perfect thus far doesn't mean it's always going to be perfect, obviously, but as of right now, it gives us a probabilistic standpoint to be looking at, and as long as Bitcoin is below the momentum pivot, which is 16,800, risk remains to the downside. And we start to look at these averages over here in the first standard deviation as areas of interest for potential nasty downside situations upon continuation. So I do want to, before we get into the potential worst case scenario, say that, hey, still I am looking at 18,500 on a higher term time frame closing basis as essentially the line in the sand for no longer bearish. I wouldn't necessarily say it's like automatically bullish from right there, but no longer bearish, very likely looking at sideways, probably looking at a bigger rally, but probably looking at a bigger rally, and then we'll come back to it. Okay, so assuming that that condition is not met coming into the next week, which is where we probably do expect this one to take hold, well, the areas of interest to the downside, to put things into perspective, would be on the lower end of the first standard deviation, 35.25%, which would put Bitcoin at about, sorry, let me actually do this correctly. There we go. It really does matter like how close we are here. About 13,500 bucks, give or take, let's say a couple hundred from that number. So about 13.5 down to low 13s. That would be the bottom end of the first standard deviation. If we were to look at the average move as relevant, that'd give us an area of interest about at 12,500. And if we were to look at the upper end of the first standard deviation, that would be 49.5%. That would put Bitcoin just below 11,000 bucks. Keep in mind that this same signal, the highest resolution that we've seen from it has been an almost 52% move. So I do think worst case scenario, maybe like a quick wake down, let's say to like 9,000 bucks. Obviously, there's order of operations here. However, just because that's a worst case scenario doesn't mean it's the most likely thing. First things first, I want to see those specific levels that we just spoke about hit and then failed below. Very important on a closing basis. And of course, to reference the 2-day time frame chart that we've been looking at throughout this past week or two, which I won't be talking about on this video, we've already gotten the bounce off of that first intended target, which was the basically $15,000 level. Bitcoin's bounced up about 20% from that, and so far kind of failing it, let's say. To take this one step further, going back on over here into the 5-day time frame, yes, we have confirmed, or Bitcoin, it's more or less a formality here, has confirmed hidden bearish divergence of 1, 2, 3, 4 drives variety. Not great, of course. That was also kind of playing into the downside bias on continuation. And then if we go into the lower term time frames, what I wanted to do now is I wanted to go over the ranges here. So the ranges, as far as this is actually spot price action, basically the same thing as CME, right? To the upside, still looking at about 18.5 as the major line in the sand. And for the shorter term, looking at the 382 right here at about 17,800, just above 17,800, again on like a 4-hour closing basis. That'd be sort of the first red flag, I guess, or white flag that the bears are losing control, and we're going to see the eternal range once again continue into the 20,000s, I'd imagine. But until that does happen, bears are in control here. And just as we said yesterday, based off of the lower term time frame volatility reads right here, this is contraction moves. This is a corrective move that we just saw on that bounce. It's a very impressive bounce. Don't get me wrong. 20% is certainly nothing, or I guess it wasn't necessarily 20%. Maybe it's 20% on CME, but on spot price action, not as impressive, about 17%. Still pretty damn good, to be fair. But a corrective move nonetheless. So over the weekend here, as usual, I really don't have strong opinions on price action. My strong opinion would be on continuation if we do see any sort of a closure, especially on a higher term time frame below that same pivot from yesterday, 16,200. That's at the point where I look at the next major level that we just spoke about to the downside as relevant in the next trending move, which would be that $13,500 number or so. There's probably gonna be short-term time frame bounce along the way, but we're talking about specifically higher term time frames here. If we were to go reference stochastic momentum, we can see on this chart that the daily continues with downside pressure as long as Bitcoin's below 19,400. Say that's, well, so far so good as far as maintaining pressure to the downside. 12-hour time frame is also going to be, well, loading here. Yes, there we go. And we'll turn back down below 16,150. So that would be essentially in alignment with a break of the bottom side of even the medium-term time frame range. The 6-hour time frame is going to be showing downside pressure with a closure below 16,500. 4-hour time frame is going to be showing downside pressure below the loading screen, below 17,200. And the hourly is going to be showing probably, I'm going to guess downside here. Actually, I haven't checked this one. No, well, it's flippy floppy basically at the pivot, which is 16,800 as of right now. So over the weekend, as usual, I really don't have strong opinions. Does Bitcoin try for another move back around the range highs? Definitely possible, but barring any sort of an actual closure above these specific levels here, I just think it's another failed move before getting ready for continuation to the downside. Personally speaking, I would say that this is one of the few weekends where I'd say a trending move actually is a little bit more likely. The reason why I say that is because of the way that we closed on Friday, or not we, but Bitcoin closed on Friday. And CME obviously closed below its momentum pivots on the 2-day time frame, but I won't bring that up on today's video. We'll speak about that one tomorrow, so it'll be more relevant tomorrow. But other than that, I think that is a good place to be leaving off on a video like this. Nice and short and sweet, hopefully short and sweet. And was there anything else that I want to say? Yeah, because there's so much animosity going around exchanges right now, I wanted to make sure that one of the exchanges that I've been working with, ByBit, is, well, legit, like for my own purposes, obviously, because I don't want to be promoting fucking garbage, of course. And of course, I can't actually look into the internals of their situation. But what I am assured from their representatives is that they are working on something very specific. It is called Merkle tree analysis to provide proof of assets, like we have what we say we have, basically. So they are working on that. I'm told that they are going to release that as soon as possible. In the meantime, they have some ridiculous promotions going on. I'm guessing they just want to take over the market share as much as possible now that FTX is, I guess, well, out of the picture, it seems like. So they're offering 30,000 in deposit bonus with the link in the description below, and also 0% on fees for maker orders for both spot and derivative contracts. Again, only with the link in the description below. Other than that, trade at your own risk. Understand that until this sort of verification comes out, it is still technically risky. But for right now, I think still the best case practice, or the best practice really is to, if you are intent on trading, really only having a small portion of your equity on an exchange, and use the leverage in that case in order to cover your full stack, if that is what you intend to do. You don't have to risk it all on an exchange. I'd say that that's probably one of the times where using leverage really does make sense. Anyways, I think that's a good place maybe leaving off. I want to be wishing you well. Hopefully for anyone who was affected in the FTX situation, this has a good resolution. I mean, we're still in the early days of this, and personally speaking, there's no sense in not hoping for the best. Now, I understand that things do look kind of bleak right now, but also on another somewhat related note, I do want to give a little bit of notice to the extremes that we're experiencing in the market right now. I also said on a tweet, I've actually been tweeting a lot recently because it's actually been kind of fun since Elon Musk came in control. But where is it? It's somewhere over here. Yeah, we've seen a black swan. This FTX situation is quite literally a black swan, obviously. We're witnessing extreme fear, extreme volatility, extreme macro conditions. And, well, these are typically situations where time-wise, we're probably closer to a low than not, a major low in this case. Doesn't necessarily imply price-wise, as we just looked at, like things could fall quite a fair bit more, but ultimately, I do think that we're probably going to be witnessing like a low, very likely before the end of 2023, maybe even within the next couple weeks here. So with that in mind, I think that's a good place to be leaving it off. I want to be wishing you the best. Much love, take care, and see you hopefully soon.